gentlemen, welcome back to another episode of Woodburn's Solving Your China Business Pain Points. My name is Christina Kohler-Colucci, and I'm the head of business advisory at Woodburn Accountants and Advisors. And in today's episode, we are going to be looking at the differences between China and the international accounting standards. Now, the current accounting and bookkeeping systems in China are relatively recent, and compared to standards in most Western countries, they tend to be more outdated, more complex, more complicated, and do represent a big challenge for foreign companies. Until a few years ago, Chinese accounting standards were still based on a socialist economic model. Since then, the country has gradually implemented a significant degree of reform regarding the traditional accounting standards and has adopted a more modern system that incorporates more stakeholders in the process. There have been regular updates to the accounting standards used in China, including new laws and regulations. It is crucial, I will say, knowledge is power. So it is really vital for businesses and foreign investors to understand these Chinese accounting standards and how they may affect their China business. Now, accounting and bookkeeping in China are governed by the Chinese accounting standards, also known as the Chinese Generally Accepted Accounting Principles. The Chinese accounting standards framework is based on two standards: accounting standards for business enterprises and accounting standards for small business enterprises. All publicly traded companies in China must eventually adapt to the newer standards and ultimately converge into the IFRS system, the International Financial Reporting Standards System. However, most Chinese businesses do not currently use IFRS. There are several differences between the Chinese accounting standards and IFRS. The Chinese Ministry of Finance issues and monitors the accounting standards for the Chinese accounting standards. IFRS emphasizes the nature of the account, whilst the Chinese accounting standards accounts are based on their function. So one is based on nature and one is based on function. In the Chinese accounting standards, the local currency of renminbi is utilized. Transactions in foreign currency are converted to the equivalent amount of renminbi by using the official rate. Additionally, double entry is completed only in renminbi. The Chinese accounting standard uses the historical cost method more often than the IFRS. And this use is especially preferred by small, medium-sized companies, which may have trouble obtaining fair value data. The Chinese accounting standard requires that accounts begin on January 1st of each year and involve more stringent requirements than IFRS. So, for example, the Chinese accounting standards expect the disclosure of the identity of the business partners. The Chinese accounting standards may also require indirect cash flow statements and comments regarding the fairness of these transactions. It is mandatory for all types of foreign invested companies in China to comply with annual statutory auditing and other compliance procedures, according to the company law and other relevant regulations. Now, just a point on this is that audit reports are not actually required by law, but they are required for the annual profits tax filings that occur each year, the annual inspections that occur each year, and if you are planning on repatriating dividends, then they are also required there. So although there is no requirement to do it, you are enforced to do it, because in order to complete these statutory regulations, these statutory auditing items of annual profits tax, annual inspection, and then ultimately dividend repatriation, you have to complete these audits. And the data that you insert into those items is based off of the audit reports. Now, foreign invested companies, as you can guess, can only distribute and repatriate their profits or dividends back to their home country or to the shareholder after completing the annual statutory audits and settling relevant tax liabilities. If this process is not finalized, companies face extra expenses, penalties, or ultimately even being put on the blacklist by the Ministry of Commerce. Okay, so it's really important to understand what are the requirements associated when following the Chinese accounting standards. Now, Obviously, small, medium-sized companies often lack the necessary budget that larger multinationals spend in expensive, specialized accounting software systems to help them be compliant with Chinese accounting standards. And often they do these mappings or conversions, or they do their books manually in Excel. Now, when mapping books, companies need to pay close attention at the discrepancies between the Chinese and the international accounting standards. So this is where it is important potentially to outsource these functions to external providers who can help you with this. Foreign investors should be cautious and recognize not to take shortcuts. It's really important to place focus and attention on making sure that your books are clean, that you are reporting the right data, and that you're able to consolidate that data with your home office, with your shareholder, and with your investors. But ultimately, that you can also use this data on a year-on-year basis to analyze how your business is growing, how it is scaling, and how it is systemizing itself. Don't think about just hitting a shortcut just because the Chinese government is requiring you to do something. Think about the long-term growth and strategy of your business. I know a lot of leaders, entrepreneurs who skim out on the accounting and the finance of their business to only realize at the point where they want to be acquired that they don't have clean data. And by data, I mean financial data. And it leads to then paying a hell of a lot of money out of pocket to fix that for all the years that the potential investor or the potential acquirer is looking to do their due diligence on you. So it is really important to adjust, implement best practices as soon as your company is incorporated in China. Now, if you are struggling with this, if you're struggling, again, to understand the difference between the Chinese and the international accounting standards and how you can consolidate your books, it's always a matter of starting first with your China books and then taking those and consolidating it with your international books. But if you are struggling with this, we've inserted our link to our diary, set up a call with us, and we'd be happy to help you to solve this very specific business pain point that a lot of business leaders deal with. So don't feel alone. If you enjoyed today's video, please do press that like button and do share it. It helps more people who are struggling in China gain access to this information, which is all free and complimentary. And last but not least, if you want to find out more about what we do at Woodburn Accountants and Advisors, head on over to our website at woodburnglobal.com. Look forward to seeing you on our next episode. Take care and goodbye.